Welcome back to Recovery Report Live. I'm Dan Odess, CEO of GlobalPro, where we manage risk to recovery. We've been doing it for more than a decade and $1.2 billion in damage recovered for our clients. And we can continue to do these things because people like you need our help, specifically in times like this. Why? Because the insurance market is fickle. It's a very interesting time for us as business owners or community associations to deal with insurance. And it's important that you have the information you can use. And by tuning in every single week right here on the Recovery Report Live, you'll get that information you can use. Now, today's topic is about navigating insurance premiums as well as dealing with fiduciary obligations of your board members. It's really important for everyone to understand what it means to be a board member and what it means to make sure that you are protecting your community when it has loss or damage. And that honestly goes for when you're placing insurance as well, because at the time that you're placing insurance, you're met with all kinds of information from individuals that are motivated by the cost of your premium. How do I say that? Because ultimately we all know our brokers and our agents get paid by a percentage of what we pay the insurance company. And they have long-standing agreements with these insurance companies. These agreements predate your relationship with that broker. So it's really, really important for you to understand what this means to you so that you make sure that you're getting information you can use from the source that is of interest, that has the same interest as you as a community association. So pay close attention, make sure you understand where this information is coming from and what you can do as an association to protect your rights. And so the part about navigating the insurance premiums that I want to focus most on is this misinformation about how rates are actually set. A lot of people conflate the issues regarding health, life, and dying, as well as auto, with property insurance, particularly in this conversation for a community association. Well, when you have a loss as a driver of an automobile, that loss follows you from car to car. Well, when it comes to a community association and you have damages or losses that are, let's say, from a nearby project, once that project's complete, if you do a risk study on it, there's no chance of that type of loss ever occurring again. So how is it that you can say by making that claim, your rates are going to go up or it's going to impact you in some way? But also understand that rates are mostly set by legislative initiatives through bills that become laws, and those laws are to help us as the public. But as we all know in Florida particularly, some of the information that's been peddled by the industry isn't exactly, let's say, right in our opinions and our review of it. In fact, if you look at the 5 or so insurance companies that have recently gone insolvent, the audit reports on them make no mention of litigation, despite the fact that most of the initiative to raise rates, to pass and approve anti-consumer legislation broadly throughout the state of Florida relied heavily on claims adjusters, as well as, and mostly, insurance attorneys, litigation attorneys representing policyholders. They were said to have driven up the cost of insurance, and that if we, as a community, agree that the insurance companies shouldn't pay legal fees, even when they're dead wrong about denials and underpaying and made business decisions, that somehow these attorneys aren't entitled to the full amount of their fees. Well, that'll help us all save insurance premiums over time. Well, it really hasn't panned out that way. And also, too, the numbers and statistics behind it don't support the information or the statements that are being made at the legislative level. And so it's really important to understand where this information is coming from and in what context it's being provided. And as we know from these audit reports, it mostly has to do with the fiduciary obligations of the executives running it and the management of that money that they have from the premium dollars they're collecting and what they pay themselves as one of the top 5 issues that was going on. It has to do with compensation. And again, their fiduciary responsibilities and how they're discharging those obligations and managing the actual companies themselves, not the claims and certainly not the litigation expense mentioned anywhere in those reports. Now, many on the insurance company side have said, well, that's misconstrued. It was supposed to be said this, whatever, but it doesn't say it, okay? And that's the point I'm trying to make here. Now, the reality of it is that if you're looking for competitive insurance, it's coming. We are seeing in markets in Florida that there are, in fact, ways which you can save money on insurance. Are you going to save on premium, the total amount? Who knows? if the legislature got harder on these insurance companies, investigated what they're doing with their finances, as a recent report just came out about how they're moving around money with the general agent, the reinsurance issues that are going on, and how a lot of these insurance companies kind of are meddling and involved in this process by which these rates are being set. Perhaps if we were to get the real information, the get behind the scenes information as to how they're managing these issues, we would probably see, and what we've been talking about a lot here on the Recovery Report Live, about market conditions impacting rates more so than if you make a claim yourself. It's not to say that if you aren't in the business of making claims, like you just make claims all the time as a community association or a business owner, that you're not going to see rate increases or potentially get dropped and an insurance company not even be interested in bidding you. I mean, man, if I was an insurance company, I wouldn't want to do it either. So keep those things in mind, because we want to be making claims that will result in recovery. That's why you have insurance to begin with. But how do you know? You don't really know if you're not an expert in it. Which brings me to my next point of the conversation, is about your fiduciary obligations as board members. And these things really work hand in hand. The reality of it is that even if you worked for an insurance company as an executive, or perhaps you own other real estate throughout the country, it does not make you an expert in insurance claims for community associations, not even an expert in actual community association insurance, let alone business insurance for your particular business operating in this market itself. That's not how it works, because each market jurisdiction, whether it's the 3rd DCA and the 4th within Florida, has case law. This case law is what gives words meaning, and then those words get meaning from words around them. And then you have common law, which is your Florida laws, and this is not a legal class on how these things, it's just literally basic knowledge of how all of these things operate and how we get to where we are today in this conversation about rates and about claims and their impacts and things you should be considering. And I'm jumping around a bit here, but it's all very much important, and it's all very much tied together as one issue that you need to understand. That, again, what we're being said or told at the legislative level isn't exactly supported by the reality of what's going on the ground. In fact, we had a major insurance company after Hurricane Ian get slammed with lawsuit after lawsuit, class action lawsuit, for fraud, for editing claims and to underpay. Now, you paid all this money. They claimed they needed all this money, that they needed more money because they needed to cover these claims. And even when they owed you the money, they went and found someone to fraudulently to edit a report, not the person in the field, and tell you that you're not owed the money. But we're all paying for these processes and that are failing us as consumers, right? They're not protecting our interests, particularly here in Florida. The aggressive initiative of some of the legislative bodies to attack public adjusters and attorneys really hasn't resulted in any savings. Have you seen it? I mean, I'm here residing as a business owner, as a homeowner in Florida. I'm not seeing the savings. I'm not seeing the dramatic, wonderful impact of all of this anti-consumer legislation, which makes it less marketable or interesting to be in the business of helping consumers in dealing with these behemoths, these trillion-dollar industry, this insurance. Now, insurance is so important. And I like the individuals that sit on the other table most often. We work with insurance companies all the time. But unfortunately, a lot of the people that are making the decisions within the ranks of insurance companies are not the boots on the ground and not the people that are sitting actually across the table trying to resolve these things. And sometimes this has to do with how the claims were reported initially and how and what appears on your loss runs, which will impact your premiums ultimately when it comes to general liability and crime policies. Proportionate, if you look at the impacts of claims and the impacts on these rate increases, it's been dramatic on the side of general liability and crime and other lines of types of insurance, more so proportionally than in your property, even though your property remains to be the biggest line item that we're most focused on oftentimes. Proportionally, what you're not seeing are other smaller limited coverages for, let's say, crime, like I've mentioned now a couple times, where the premiums were nominal, and now they're starting to encroach into the $1,000 plus range, and suddenly you're taking notice of it. But again, over time, that's been happening, not because you've had a crime loss on your property. In fact, many associations we go on don't really have general liability losses, don't really have crime losses, but I've seen dramatic increases. Those that have had it have seen even massive increases there. But again, because the number's not outpacing the property. The focus has been on the property. At the legislative level, they talk mostly about property. They're not talking about these other lines of insurance that are adding up to that ultimate limit. And a lot of those increases that they've seen there is nothing to do with the actual claims themselves. But you will see a greater impact on general liability and your crime if you do have losses. So it's important that you consider other services that we offer here at GlobalPro, like the SEPTEB, where we actually go out and look at the crime and prevention, and we do an analysis of it, we stamp and give you a report. These opportunities to mitigate potential lawsuits, presumption of liability, there's all kinds of great things and other things we do. Check out our website at globalpro.com. Make sure you hit the resource section, look at the services. Under services, you'll see preferred client services. You'll see the Ready, Recover, Rebuild. There's many things on our website that can help you in navigating these processes. And we want to be a resource to you. That's why we do this Recovery Report Live, so that you understand as a fiduciary, if you're a board member, whether it's for your business or for a community association, you're obligated to make decisions that are in the best financial interest of your actual organization, whether it's a business or a community association. You have to be making financial decisions in the best interest of your business or your community association. If you're not hiring a representative to help you place your insurance or manage your claims, are you making the best financial decisions in the best interest of your organization? I would beg to say that you probably are not in most cases. Again, even if you have a background in insurance or you've been operating businesses for a long time and now you find yourself as a board member, you are still a fiduciary. So you need to make sure you're making it. Now, when you schedule to do a construction project, most often we see associations go out and hire an owner's rep. Why? Because, again, they want to protect the financial interest of their fellow unit owners and their organization. They see an obligation to do that. In fact, a lot of bylaws require it. But when you have a loss of similar size, if not even greater than any construction project that you have ever done on your property, we oftentimes see associations want to see what the insurance company is going to do first before they consult with someone to represent their interest. And by the way, your broker absolutely does not represent your interest in a claim. They're licensed to sell you a product. They can certainly help you, give you some insights as to what's your policy that they sold you and done, but they are not licensed to handle claims. They're not a public adjuster, a licensed public adjuster or duly licensed attorney that can represent your interest in a claim. Now, they certainly can make some phone calls over to your insurance company and talk to some people and rattle some cages, but at the end of the day, remember, they contracted with that insurance company before they contracted with you to represent you in trying to get you a policy. It's an interesting kind of conundrum. They are a broker. They're the middleman, right? They're trying to balance the interests between the insurance company and yours. We're not doing that. We want to advocate for only your interests and making sure your financial interests are protected. And so if you don't have someone on your side representing your interest when making claims, then how are you protecting the financial interest of your association or your business, right? It doesn't really add up to me. Because if I was going to file taxes, I certainly wouldn't say, hey, IRS, how much do you think I owe you? You know, you certainly can file your own taxes, but I've never seen a community association do it. No, they go out and hire a licensed accountant in this field specific to community associations, and it's a very specific trade. It's not just an accountant for anything. It's like a doctor, right? Your dermatologist is not going to give you advice with regards to brain cancer or colorectal or any of these other parts of your body, right? Just because they graduated from medical school and now suddenly get that doctor, the DR before their name, doesn't mean that they can provide you advice, right? As it relates to all other symptoms in your body, if not in the specific field in which they are licensed and experienced to handle those particular matters. Just like an accountant. There's accountants that do businesses. There's accountants that do personal tax issues. There's accountant firms that have people within their firm that do businesses and personal. But they're separate, and they usually work together and trying to do the best thing for you. There's also firms out there that specifically do community association work. Like GlobalPro, we specifically manage claims for community associations and business owners. That's what we do. We hone in. We are experts when it comes to community association related insurance issues and for business owners. That's a big focus of ours. Now, we certainly have people on our team that can help homeowners, high net worth individuals, family offices, federal government, et cetera, et cetera. But really, our core expertise and our focus is community associations, business owners. Now, you may ask yourself why we can say those things. Well, because for a business owner in a community association, you're oftentimes sold a commercial policy, a CP policy. Look in the bottom corner of the form. You'll see it there. That makes us experts in it. So your broker is licensed to sell you something. That's what they do all day long. They look at risk ratings. They submit proposals. They're talking to the insurance company and underwriting. Okay, that's a different role and responsibility than managing the actual claims themselves. So ask yourself this. If you're a board member and you suffered a multi-million-dollar loss and your agent or broker says, hey, don't file that claim, you have a renewal coming up, it's going to impact your renewal, are they looking at protecting you financially, or are they looking at what may come from the placement of your insurance, which doesn't necessarily translate to what you're actually entitled to recover? And if you're obligated as a fiduciary to seek all recoveries and any entitlement and protect the financial interest, how do you substitute what may it cost you versus what you're entitled to recover today? It doesn't add up. And also, too, I was just asked this question yesterday. I was at a board meeting talking about a multi-million-dollar construction-related loss from a nearby project. And I was asked, what's your risk measure for if we make a claim today and how is it going to impact our renewal? I said, well, sir, I hear about associations all the time that don't get a renewal, see rate increases, get dropped for not even filing claims. So what is your risk measure for that? How do you measure that if I said, I'm sure you know other board members that have seen rate increases without even making claims. So why is it that you can say that by making a claim, we're going to see a rate increase? Well, the reality of it is this in rate environment, it's tough to say whether or not doing anything is better than doing something. But I can say this with a lot of authority is that when dealing with this particular type of matter, I have not, that I'm aware of, seen an association negatively impacted by making this type of claim. And I stated that. And I said, so that's what I have to go on. That's my experience. What's been your experiencing, sir? And he didn't really have a rebuttal response for it. Simply kind of conflated this issue. Well, the market, the rates are going up. The rates are going up. Well, not necessarily. And there's other parts of the country that they're not. And quite frankly, we're seeing where we're managing claims for policyholders in other markets, seeing rate reductions while we have open claims. Okay, so again, the direct correlation between making claims, rates going up, getting dropped, and everything else, not seeing the connection in it. I'm not seeing a definitive connection. I'm not going to be ignorant to say that there may not be a connection, but I'm not seeing the connection in our experience and our involvement in our claims. But the reality of it is, if you're entitled to millions of dollars, and in this situation, I knew that the policy premiums were hundreds of thousands of dollars, not millions of dollars. It's a simple math problem to say, hey, you're entitled to recover millions of dollars from insurance policy, and you're worried about the hundreds of thousands of dollars. You may see a smaller increase, and it's going to be small, relatively speaking to what you're paying today, and also certainly relative to what the claim is. So think about it as a fiduciary. Are you really making a decision not to hire someone like us? And are you, in a situation like that, are you making a financial decision in the best interest of your fellow unit owners, including yourself? No, absolutely not. There's no way that you can tell me and honestly look at me that you are making a decision, cognitive decision, in the best interest, financial interest of your association or your business for that matter, in this type of situation where there is no definitive connection for property-related losses on a commercial policy between claims for real property damages suffered from a single definitive clear-cut issue versus that of, let's say, auto claims or health, where, again, the insurance is on you as the individual driving a car. You know, again, if you own a bunch of Ferraris and you're driving around at high speeds and you get arrested for it and you get in an accident, you know, you're more prone to get in another accident, so your risk rating goes up. I mean, how is it that if the project next door caused damage to you, that your risk rating would go up when that project is completed? There's no further risk. So how does that increase the need for more premium to cover your risk, the risk of something happening at your property? Again, I give an analogy to location. It's the biggest play in real estate, right? First thing you look at is, I want to buy this. Is it in a good location, right? But location is also relevant to insurance, right? We all know. I mean, if you live in, any coastal area, whether you're in Texas, Florida, up the coast, or New York, you all know that location is a prominent factor in whether we would buy something. It's also a prominent factor in whether someone's going to sell you insurance. And insurance companies historically have made decisions. They don't want to sell insurance in a coastal area, not because someone made a claim, but because they decided they don't want that risk anymore. Just like someone would decide, I don't want to buy that property anymore because I don't like its location, or I'm going to sell it. I'm going to get rid of it because I don't want to deal with the risks associated with owning or insuring a property in those areas. Again, very little to do with a singular issue. I mean, we saw major insurance companies out there all the way back to Andrew, to Hurricane Wilma, to Irma, to the Ian, decide to pull back out of the market, not because any individual claim. In fact, it's funny because there was one said insurance company after Hurricane Wilma, I'll never forget it, sent out over 100,000 cancellation non-renewal notices to policyholders, right? We saw such a dramatic increase in interest in our services for people that had not yet filed claims for that particular insurance because they thought, okay, well, now the insurance company's canceling, I might as well now make my claim. It's like, well, what was your fear of making the claim before? I mean, they canceled you and non-renewed you anyways. But now that they canceled you and non-renewed you, now suddenly you want to make that claim. So don't wait, because when you wait, you can cause prejudice, right? You can't cause prejudice. So, and then the insurance company has a defense not to pay you. So you have waited. You've violated, in my opinion, your fiduciary obligations to your association by waiting, by not making a proper claim, by not engaging a representative who's skilled in doing this, who has experience and license to actually do it. And you relied on opinions of your association counsel, who again doesn't know insurance, or your broker who doesn't manage claims, but yes, sells you insurance. And just because they sell you insurance doesn't mean they know how to manage the claims. Think about it like in an auto dealership context, right? Which is something very familiar to everyone. You have the auto salesman, and then you have the auto mechanic. When you need to change your oil, who are you calling first? And why isn't the auto salesman changing your oil for you? I mean, I would argue that in some instances when people come to me and say, oh, my broker told me my rates are going to go up. And I said, well, based on what? Did they give it to you in writing? And then I would say, well, when you had to change your oil, you had a problem with your car that you just bought from the dealership. What did that salesperson tell you to do? They said, oh, go over to the service department or go to a mechanic. And we all know that if we go to the mechanic at the dealership versus a mechanic of a third party, completely different price, completely different service, good or for worse. But if we go to a really reputable third party mechanic, has an incredible Google score and is great on any one of your search engines, whatever else, and is recommended to you and has references and has done an incredible job, that's going to be a better return on your investment in that vehicle than if you go to the dealership, right? Because it's going to cost you less, but you're going to get the same, if not better service, and you're going to get the same OEM parts back in your car. And a lot of these guys are certified to handle, like, let's say Mercedes or BMWs or whatever else, or Chevy or Ford, whatever you own and operate. They have the same certifications as that dealership, but the difference is they're not attached to the dealership. So a lot of times you'll get a better, more honest opinion of what it's going to cost, of what the issue is, et cetera, et cetera. It's a give and a take, right? You got to understand where it's getting from, but that's the reality of the situation. But unlike the auto dealerships and everything else, we're talking about you bought a product that you never got to test drive, your insurance, right? You never test drove the insurance. And definitively, inside most commercial policies that are being sold to community association and business owners in coastal area, whether it's Texas or Florida, it's surplus lines insurance, meaning it's not an admitted insurer in the actual state. That's important because when you look in those claims documents, most often, they don't even say to report the claim to your broker because they even acknowledge that your broker is not the person that's going to handle the claim. So why is it that you go back to that same broker to ask them about the claim? Your own insurance company is telling you not to call your own broker contractually, but they love when you do. Why? Because these brokers take that information, put it in writing. They don't understand the claims process. They're not up to date on case laws and holdings and common law changes and everything else. No. They're not. I mean, I can tell you that I've rarely have ever found a broker or agent that spends as much time as we do, right? Where we manage the claim side of this stuff and we help as an owner's rep place insurance in various different markets. Very seldom. I mean, I go to the conferences. There's no brokers there, right? There's WIN conference or the RIMS conferences or whatever else. They're not there. They're not. There's maybe insurance company representatives there, but we don't see brokers at these organizational meetings when we're specifically talking about claims or risks and things like that, or having a panel of lawyers talking about certain case laws and interpreting the words within the concept of words. So there's things you can say and pitfalls and issues that you can put in a claim early on to prejudice your rights. That early infancy of the claims is really important. And by the way, the legislators know it because they oftentimes try repeatedly to pass laws which will limit your access to someone like GlobalPro to help you early on. And they make it contractually difficult for us with long extended periods of time for rights of rescission and other nuances like early termination and what that means. And we're obligated then to include all this language in our policy and subjected to these things. No other business in the world, in the country, let me say this, in the U.S., sees the issues that we see with regards to the legislative body and our contracts. It's very unique and nuanced. I mean, go look at Florida Association of Public Insurance Adjusters, another great, amazing organization, right? And that's another resource. You go there. There's no brokers, agents there. No, there's lawyers and claims experts, right? That we're all there sharing information about the trends and trials and tribulations of dealing with these insurance companies in the industry and the legislators. Huge lobbying effort for some of these organizations and dealing with these things. So, it's super important to be knowledgeable of what's going on today and how that's going to impact policyholders. And that's where we are. We're in the trenches. So understand this. So in summary, fiduciaries understand the different roles and responsibilities of those in the process. Use the analogy if you're talking to other fellow board members and you're having a tough conversation because they just love their agent and broker, right? They want to believe that they have the best interest in mind, right? In dealing with the actual claim situation and dealing with those issues. And explain to them the difference between a mechanic and a salesperson, or like filing your own taxes. I mean, is really your community association using like a website like TurboTax to file its taxes? I mean, I don't even know if you can, but like, are you on H&R Block? No, you're hiring a experienced expert accountant in the field of community association taxes to file these things. I know you are. Okay, it's not you are going to a specific trade, but there's law firms that specifically do community association related association issues, right? They're super knowledgeable of 718 and 711. You all know who they are. You don't just go to some general counsel or some general law firm, even the big boys of the world. No, you go for someone that's in your local market that specifically deals with your type of issues, and that's who helps you. That's what we do at GlobalPro. We specifically help community association business owners. And if you're not engaging us or someone like us that has this experience, and again, not all public adjusters are created equal either. People that are licensed to serve the interest of a policyholder making a claim on its own insurance or someone else's insurance, first or third party claims. They're not all created equal. There's some that do residential claims. There's some that wish they did community association business claims. Doesn't mean they can do them, but they wish they could because they think the numbers are bigger and they can make more money doing these things. And business owners are motivated by all kinds of different things, right? And we certainly are here to make money and do things the way that but we're here to do things intended the way that they're supposed to be done, right? And that's what differentiates someone like GlobalPro from someone that does homeowner claims or someone that does auto claims, just like the doctor analogy I just recently gave regarding dermatology versus brain cancer. Like, it's very specific. And so if you're not finding someone that's educated, that's experienced, that's licensed to manage and do these things, and I'm talking for brokers and lawyers and for public adjusters or anyone, then you're certainly not protecting the financial interest of your association. And if you're okay hiring an owner's rep to handle $100,000 or a multi-million-dollar construction project, why is it that you're not okay hiring a licensed individual to handle $100,000 or a multi-million-dollar insurance claim? And you rely on someone like your agent or broker who's not licensed to manage the claims to do those things. What is the fear? The fear should be that you're not protecting the financial interest. The fear shouldn't be, oh, my rates are going to go up. Your first thought should, am I doing what's in the best financial interest of my association first? And if the answer is no to that question, then it shouldn't be, then, okay, I'm going to now call my broker about this. All right. And if you call your broker, hey, broker, is this covered? By the way, they may have an obligation, insurance company, to still report the inquiry. All right. So keep that in mind. Well, I want to leave you on that note. Think about everything I told you. It's a lot to pack in to today's broadcast. I like to keep these things short. I went off on some tangents. I wanted to make sure I bring it to a level that you fully understand what I'm trying to make by giving you these various different analogies. Maybe that will help you in your next conversation with your board or your business. But even better than that, give us a call anytime, 855-487-7475. If you're in Texas, Florida, New York, Carolinas, Georgia, wherever you may be in the United States, we can help you. We are licensed in so many different jurisdictions and have so much experience here at GlobalPro managing claims worldwide for policyholders. So if you liked what you heard here today, make sure you hit that subscribe button. Make sure you like us and follow us on all the social media. And tune in next week right here on the Recovery Report Live, 11 o'clock Eastern Standard Time. We'll see you next week right here on the Recovery Report Live.